That's beautiful.
Hello, everyone, and welcome to the DARA Compliance Summit. We are very excited to have you here. We want to welcome all of you who are listening. We have a lineup of wonderful panelists that Wendy's going to be describing. So for those that do not know me, my name is Jacqueline Cooper. I'm the CEO of Blockchain Legal Institute and also one of the directors of DARA's and the foundation. So we have my co-founder, Matt Rogers, who's on screen right now, and I'll have him introduce himself, and then I'm going to introduce Wendy.
Hey, good afternoon. Happy to be here. We have a great list of speakers from some prominent companies that operate in the United States, and I'm looking forward to hearing from everybody.
So, Wendy Carver, who is the Director of Leadership at DARA, is a senior capital market executive with over 25 years of experience leading and managing and building companies across a wide variety of businesses. She has been the Chief Operating Officer at Wyoming Special Purpose Depository Institute. She has built and launched tokenization panel platforms, and she has extensive experience in capital markets, managing trading desks, structuring and managing operations. I'm going to let her go ahead and introduce our first panel, and definitely stay on for our second panel because we have some very distinguished speakers.
Thanks, Jackie. Thanks, Matt. Really excited to kick off our first panel talking about compliant blockchain and digital assets ecosystem powering the future in U.S. economic development and innovation. So our first panel, who are coming into the room right now so we can see this spectacular panel with this incredible diversity of expertise, and we are really thrilled to welcome them. So first we've got Agnes Budson, who is a managing partner of Blue Edge Ventures, focusing on investments in blockchain and digital assets infrastructure, technology, particularly in early stage companies. And so with over a decade in traditional finance, Agnes has played a significant role at BlackRock, collaborating with major institutions and central banks, including the European Central Bank, US Federal Reserve, and the US Treasury during the global financial crisis. And Agnes was an early member of the leadership team at Consensus. She's a key player in the Ethereum ecosystem, where she was pivotal in building and scaling both the company and the Ethereum ecosystem. So Agnes has spoken on blockchain and financial technology and its applications at the Mobile World Congress in Spain, the FDIC, US Chamber of Commerce, US Department of State, and the World Economic Forum, Davos, and much more. I'd also like to highlight Benjamin Diggles. Benjamin is the co-founder and chief strategy officer at Constellation Network, responsible for enterprise, federal, academia, consortia, and general partnerships. So Constellation is a feeless decentralized network that enables anyone to build the future of Web3 and a secure, infinite, scalable, and cross-chain interoperable protocol with ecosystem partners such as the US Air Force, Snowflake, Amazon Web Services, IBM, and more. So with 25 years of professional data and technology experience, Benjamin is an industry leader in blockchain, working with enterprise companies, the Department of Defense, and other three-letter agencies to rethink their communications infrastructure. So Benjamin works on secure communication initiatives for smart cities, vehicles, and AI algorithms to provide a proof of source, resulting in a confidence score of what is being communicated. Okay, very excitingly, we have Charles Kolstad, partner at Withers Bergman in private client, tax, and corporate teams, where he led the formation of the firm's cryptocurrency and digital asset group, representing investors, issuers, developers, NFT miners, minters, and exchanges. So in the Web3 crypto asset and AI space, Charles advises clients on corporate, regulatory, and tax issues related to token offerings, DAOs, foundations, layer 1 and layer 2 blockchains, as well as on US securities laws applicable to staking and token offerings, as well as tax estate planning issues for founders and investors. Charles has previously focused on blockchain technology companies, on tax and other issues for ICOs, and the tax treatment of minors and investors in corporate VCs. He's been a tax partner at Ernst & Young in the National Tax Office's Strategic Asset Finance Solutions Group. He's a frequent commentator on cryptocurrency and digital asset related tax and regulatory issues, and the author of numerous articles and podcasts on tax and regulatory issues facing companies in the digital asset space. And very excitingly, we are thrilled to have the star of Emily Goodman as our moderator today. So Emily is a partner at FS Vector, a strategic consulting firm for innovative financial services clients, including numerous platforms and companies in the Web3 and digital asset space. So Emily leads FS Vector's licensing practice, serving as a strategic advisor to licensing clients with expertise, including license and charter strategy, product development, compliance, audits, regulatory relations, fraud and risk, among others, and she is a leader with her work in the fintech industry. She has been embedded in projects spanning diverse products and companies specializing in go-to-market strategy and scaling innovative financial products. So prior to FS Vector, Emily has been Chief Legal Officer of HQ Digital, a digital multifamily office serving digital asset entrepreneurs and investors, the lead product and regulatory counsel at Brex, and she spent a decade at American Express as vice president and senior counsel supporting the Digital Labs business unit. She's a thought leader in the payments and digital asset space, and I'm going to hand it over to Emily to kick us off with this great panel.
Thank you so much, Wendy. So first, I want to thank DARA for hosting this session. Everything that we cover today will align with DARA's mission, which is to empower businesses in the US to thrive with crypto regulations that focus on economic development, safety, and compliance. So to that end, today, we're going to focus on building products, economic development. Each of our panelists, they occupy a space in the crypto ecosystem that's really special and unique. They're working with builders and regulators and government officials every day. So there's without a doubt a really important discussion and critique to have regarding the current US regulatory environment. And I'm sure we all have those on a daily basis, professionally, probably in our personal lives, because we talk about crypto, all too much. But today our panel is all about building. And so with that, let's kick off. So what I'd like to do first is kind of orient the session. We're talking about compliant blockchain and digital asset solutions. So, I think let's first define compliance in the context of blockchain and digital assets, and at a high level, why it's so important to think about compliance, from an economic development perspective. So Agnes, if I could hand it off to you to kick off, and then we'll go from there.
Absolutely. And so the way I'm looking on regulation and compliance, it's really regulations and compliance is all about building trust with, retail investor, with an average user. So when you start looking at compliance and regulation and trust, that translates really into larger investments and the larger scale into the industry. That translates into more of a mainstream adoption and really new level of market penetration and market adoption. And that's what our industry really needs. So as we all can agree right now, regulations is never easy, especially when you are a new kid on the block. And that's what blockchain is. That's what this industry is. Or it's a brand new industry. It's not really old. So the regulations will take time, and it's going to take quite a bit of back and forth with the regulators in order to settle on something that works for both ends. And that's what regulation usually is. Regulators are not trendsetters, they are trend followers. They are most of the time understaffed, and they require a lot of really help from the industry, and they don't always ask for it. I know sometimes they just come first a little bit heavy-handed, but at the end of the day, their job is to protect average user and average consumer. So we as an industry, I think, need to figure out how to help the regulators as much as possible, how we can figure out the right way of communicating and really negotiating the happy medium for both ends. So I think I'm going to stop here and see if anybody wants to chime in and add to anything to what I said.
Benjamin, do you want to say anything or?
Sure, Benjamin, you want to chime in?
Yeah, absolutely. I mean, as far as the defining compliance, it's sort of an interesting one. I think Agnes, you nailed it. I love the new kids on the blockchain, right? That's what we represent here. Is we're forging and blazing new trails. But I mean, I do want to say, since I am more on the technology side than I am the digital asset side, even though we do fundamentally push a lot of digital assets within Constellation, is that when people mean, crypto or blockchain compliance, they really mean digital asset compliance, right? I don't run into too many folks that are really focused on how the node protocols work outside of NIST compliance and those other things that are a lot easier to assign when it comes to technology, because they've already been defined when it comes to how we manage and optimize things such as transactional data and so forth. So really what this comes down to is money, baby, right? Like making sure that we're doing the right thing as stewards of this new industry, ensuring that we're using the best practices. And so I largely agree with what Agnes has laid out, but I'm excited to talk a little bit more about this topic of blockchain from the technology perspective as we move forward. Charles?
Yeah, I agree completely with Agnes. Regulators follow, which means it's up to the industry to help them understand where we are today and where we're going to be tomorrow. Because if you don't understand where the industry is going to be tomorrow, you're going to write regulations based on where the industry was yesterday. And that's not going to help anybody. The other thing is, we're talking about US compliance, but most companies in the US that are in the digital asset space, they have users all over the world. They have token holders all over the world, software engineers, and so on and so forth. So it gets complicated because you have to comply not just with what you think the US rules are, which are sort of unclear and a little opaque at times, but you have to comply with the EU rules and the OECD rules and what's coming out of Singapore and Hong Kong and South Korea and Dubai and Gibraltar. So whoever's responsible for dealing with compliance at a particular company, they got a really big job, and they probably have a big stack of Tylenol fairly close by.
Yeah, then Benjamin, I want to push on something that you said, which has been a topic I think about a lot, which is, you said you're a technologist, not necessarily a financial services person, let's say, which is typically, a pretty good defense to getting involved in compliance and regulation. But I think the basic tenets of DeFi have really tested how compliance and regulations apply in this space. That Charles, as you said, the old laws are really designed for centralized systems, centralized ledgers, centralized systems, whatever it may be. And there's been some, I imagine that for some builders, some technologists, it's a bit nerve-wracking to be building in financial services, let's say, if you're building and you're concerned that the way that regulators are interpreting the compliance obligations could include a platform, because it has to cover someone. There has to be some consumer protection, let's say, and so it's really been testing the limits of the old argument of we're just the platform, we're just the technology. So I'm curious, just in on this same topic, like how that's come into play for you.
Yeah, I mean, so we're a blockchain ecosystem, not different from like an Ethereum or a Solana. Constellation has, a wallet, a block explorer. We have node validators. We have all the pieces that most ecosystems have. And I think a big part of that our legal guidance has largely been around the decentralization of the business, right? That sort of DAO model. We're not an official DAO, but we do have an entire governance arm that is community driven within our company that keeps us in check so that we're not a centralized institution. And that's by no means as a way to skirt regulation, but rather to better enforce good practices when you're handling a large treasury, as we do on behalf of many token holders, as well as node validators, we have to make sure that we have things like multi-signature and third-party custody control. These are all things that ensure and are great for those that are listening, that are red flags for things like rug pulls, right? There are expressions that are sort of out of the gate right now that we see in other ecosystems or other projects, when folks aren't really doxing their team. You don't know who's behind it. All the crypto is managed in one wallet. Like, these are all things that usually hint that they're going to be doing something nasty at some point. You might want to put up your guard. And so I think that it is forcing best practices from a financial institution as Constellation to ensure that we're managing things appropriately from a digital asset perspective. But as I mentioned, and the last thing I'll say is just when it comes to our technology, when working in sensitive environments that require clearance within the Department of Defense, things do need to be vetted from an ISO or a NIST perspective. There's a lot of different cybersecurity maturity guidelines that we have to follow as a company that aren't unique to us as a Web3 company, but that we have to comply to, much like other companies as well. There's a thing called FedRAMP that folks may not know about, that you have to get, I guess, certified to be able to store any government data. But when it comes to metadata, since we don't store any on behalf of our blockchain, it makes it a little bit trickier. So we've been having to work out those kinks with some of these institutions. But yeah, that's where we stand.
Interesting. Thanks. So why don't we kind of keep going down that road?
Could I jump in for just a second?
Sure, Charles. Thank you. Yeah.
So I have a lot of clients who are in the DeFi space. Half of them say, we're decentralized. We don't keep track of anything. We don't have to comply. And the other half have actually read what the EU has put out, what the OECD has put out, that says, no, just because you're decentralized doesn't mean you don't have to do KYC, AML, and so forth. So there seems to be this myth among a certain group of people that just because you are decentralized, you don't have to comply. And the other point is that you need grown-ups in the room. This is a new industry with really, really, really smart people, but they may not have always had huge exposure on the business side. And so this is where venture capital investors, the A17s, and all the people who give money to, they need to say to the startups, we want you to be compliant. We want you to have multiple wallets. We want you to have custody. We want you to have these things, because that way you'll be around 5 years from now when you'll see your vision come to fruition. And sometimes because of FOMO and so forth, some venture capitalists aren't necessarily as strong on requiring compliance by their portfolio companies. So, we need to educate both the regulators, and you've got to get grown-ups in the room to help foster, yes, compliance is important.
Absolutely. And I'd like to think that we have seen, oh, sorry, go ahead, Agnes.
I'm sorry, one additional thought just to build on what Benjamin and Charles said. For the industry, every single time, if you touch money in any kind of form, shape of way, there is going to be regulation. And everybody could kind of think about it. Yes, these are tokens. Yes, these are NFTs. Yes, these are some kind of form of digital assets. But the second they can be converted to any kind of form of, fiat, that's regulations. And that's where the regulations will come in. It doesn't matter if you're itsy bitsy startup, if you're JP Morgan or BlackRock, the regulation unfortunately works the same for everyone who touches money. So, and I'm going to end at this. So please go ahead, Emily.
Yeah. No, that's a great segue actually into some use cases and products that let's kind of do a whip around. Benjamin, if you want to kick off, and what we want to focus on here and share with everyone who's listening and watching is products that are out there, successful launches where we see the intersection of blockchain technology, digital assets, compliance and regulation, and then also economic development. Again, that's the focus of this, but importantly, that they are really compliance and regulation forward.
Yeah, absolutely. So just two quick ones, and then I'll dive into the one that I really want to focus on. Is we do have a project with the government called Iron Spider, that stands for Secure Peer-to-Peer Interoperable Data Resilience, which is really just secure information sharing. If you think about just most stuff we do when it comes to apps like Slack or email, being able to do that using a blockchain protocol that quality assures that nothing's been spoofed or messed up in transmission is a huge use case, right? That's our biggest use case with the government. And then, of course, there's trustworthy AI by putting proof of source, by tagging data at the source on a blockchain. You now have an assurance score that you can produce on large language models, watermarking, as well as the models themselves during runtime to ensure there's not been any malware or anything malicious that's taken place. Those both, I think really affect a lot of people, considering every 24 hours the world sends 380 billion emails. It's an incredible number.
So for Iron Spider, Benjamin, that would be an example where the very traditional NIST framework and government standards for touching any government data would apply. It applies to this very new and novel technology, the blockchain technology you guys are leveraging. But you went through that onboarding that is fairly traditional, I guess you would say.
Correct. Yeah. Since everything is based off of node operations, it all starts with the cloud, right? Whether it's Amazon or whoever you want to work with. So it's not super off the mark. But I will say one great use case, and I'll make it quick here because I want to make sure we have plenty of time for everybody to talk, is we have a thing called the door traffic miner, which is a hardware device that consumers or enterprise can buy, put over a doorway, and it measures foot traffic. And this shows the efficacy of things like retail, boarding times at airports, if a bathroom needs change, hospitals that are being overrun. It's HIPAA compliant, so there's where the compliance comes in. All the hardware and software also follows rigorous compliance. It validates the data in real time as people are passing it through on our network. It rewards them in a wallet with cryptocurrency, a digital asset, for contributing to that data that we then sell to third parties so that they have insights into those different workflows. So it touches everything from blockchain, node operations, wallets, digital assets, the whole thing, right? And it's a really beautiful sort of ecosystem that provides this proof of foot traffic that has a lot of value. This can also be applied to weather sensors to have the best or highest reacting weather data that you can get from that source data of individuals that get rewarded in cryptocurrency. But it gets funky when you start thinking about how certain countries may have crypto laws that somebody buys one of these miners, right? It gets a little dicey where we can sell them or we can't sell them. Mm-hmm. But it shows that the demand is there. And I strongly believe that that's the future of unlocking the balance between blockchain and cryptocurrency, is incentivized data contribution for cryptocurrency. And I would say that's probably one of our most proud expressions. It's been live for over a year now. We have roughly 3,500 devices putting data on chain in real time and rewarding people with crypto rewards in real time right now.
Awesome. Thank you. Agnes, do you want to share something?
Oh, yeah, I'll jump in, but I love the example, Benjamin, because actually in 2018, I wrote an article about data as an asset class, as a new oil. And that's literally, the idea was to pretty much figure out how to make data, valuable, and where average us can sell it or make money off of it, instead of huge data, conglomerates like Facebook or Google's or either. So I'm super excited about I'm gonna send you a note because I want to learn a little bit more about it, because this is absolutely fascinating. And then going back for a few seconds to my use case, I'm a big fan of stable coins, because I think maybe for established economies like United States or Western countries where the banking systems are very reliable and very much set in place, maybe stable coins are not as a big deal, mostly for traders that go in and out, trading crypto. But when you start going to emerging economies where the banking system is very, very iffy, when wires cost a lot of money in comparison to what it's supposed to be. When the currency is fluctuating, like Argentina or Turkey, a stable coin and being able to really have some form of, some amount of money kept in stable coins, especially the ones that are US backed, that's really a huge use case. And we can see, Tether and other stable coins being highly and widely used, which is great. Said that, stable coins do need regulations, because otherwise we can get into the point where we are again at the place of too big to fail. And then the question is, who exactly is going to bail you out? Or does, just retail investor, do they just lose when something goes wrong? I also think this can be a very interesting a case for, if some of the coins are US backed, there is obviously a movement going around de-dollarization. And we see this around already oil and other commodities. This can actually strengthen, this is very US centric view, but this can very much strengthen the use of US dollar being really the currency of the world, if we go and regulate stable coins correctly. And that also goes into euro and any other countries that are looking to really provide more, I want to say, I guess, stable option. But again, it's a long way to go. There's a lot of regulations that needs to be done. There's a few different models that are in play. I don't know exactly what the happy medium is, but that's all up to discussion and going forward. So Charles, up to you.
Yeah, the stable coins are a fascinating thing for a couple of reasons. One, they're going to be the future because they're so much cheaper to transact from a fee perspective. And I think if you look at the world, stable coins are going up. Central bank digital currencies are going down. I think that was a fad that for most reasons is just going to go away. But what's interesting from the US perspective, the US won whatever you want to call the internet situation. We've got Google, we've got Facebook, we got Apple, we got HP and Amazon and so forth. We've clearly, as a country, won that situation. It's less clear that we're actually going to win the Web3 crypto digital asset situation. And in the stablecoin context, if you look at what's out there, Tether out of Hong Kong and non-US areas is 70% roughly of all stablecoin transactions. Circle out of Ireland / the US is less than 20%. So PayPal has come out, with their own stable coin. There's going to be more, but I think you're right, Agnes. We, as a country, if we want to have a real seat at the table, we need to get the regulations quickly, and we need to get them right, so that the U.S. companies can, rock and roll and kick butt, and not get left in the dust because of regulatory issues that, are potentially solvable.
The thing that we have also going for us is US is the US dollar is the hard currency of the world right now. That doesn't mean it's going to be forever. So I think there's an opportunity to kind of mesh the digital, future of the world, since we all agreed that, internet is a thing and it's staying around and it's not going anywhere. So, now we have different models of AI, and, the infrastructure of 22nd century, as Benjamin pointed out, is being built, and we all invest in it. So there is a different way of transacting going forward. And well-regulated stable coin that is backed by US dollar might be a very, very interesting opportunity for us to continue where we started. So,
well, and you don't want walled gardens.
Sure.
If the regulators around the world get cranky with each other, you're going to have a stable coin in the US that doesn't work anyplace else, and a stable coin in Hong Kong that doesn't work because the regulators won't let it in. So uh, it's it's both a blessing and a curse. You've got to you need the regulation, but it needs to be not too tight, not too loose, sort of Goldilocks, just right. But that requires people talking to each other around the world so that we don't have walled gardens where people just can't get to a stable coin who are in a country where inflation rates are 150% a year and they want stable coin as an investment to hold its value.
Yeah, that's
Well,
correct.
it is interesting. Just today, Maxine Waters called for a quote grand bargain on stablecoin legislation here in the U.S. and a few other of the crypto bills, pushing to get a deal done with the chairman Patrick McHenry. So I've been not particularly bullish that something was going to get past this Congress, but they seem to really, at least these two, seem to really want it. And I think the excitement around stablecoins is clear. Some really boring use cases, treasury use cases here in the U.S. Not necessarily cross-border payments that are customer facing, just really, really boring but important use cases that we're seeing built today and would really benefit from the regulatory clarity. One thing I would note before we move on to the next question is, one of the things that each of your answers had in common is that the price of Bitcoin was not a factor or interesting at all to what you proposed. And I think that's probably something we all agree on as builders in the space, is that while that's fun and it gets people into the ecosystem and in the space, it is generally, for most builders, it's on, that are in the blockchain space, it's probably the least important metric that we look at. So let's move on to the next question, which is sort of drilling down on economic impact. And I'd love to hear your guys' thoughts. And Charles, I'll hand it off to you first on compliant blockchain ecosystems and how you see they're contributing to job development, economic growth in the U.S. Today, what you see in the future based on some future trends that you see.
Okay. So the world has evolved to where the DAOs, the governance, the foundations that control most blockchains, most protocols, a lot of token issuers, they're all offshore. They're in the Cayman, they're in the BVI, they're in Panama, they're in Gibraltar, they're in Switzerland. So you look at that and say, oh, that's not good. They're not in the US. But in many cases, the actual human beings who are doing the work are all sitting in the US. Now, there's a whole host of tax issues and securities law issues and so forth with them doing that. But the technical know-how and the sort of historic, let's make it happen in the US spirit is still here. And this is where the regulation comes in. We need to get the regulation right so that people who felt they had to be offshore will come back onshore and continue to drive the economic development, drive the technology. There's a lot of technology people available these days from some of the big companies because of AI and so forth. So, let's get people back into the US and hire these people who have great skill sets so that the US can continue to be, have a seat at the table in a meaningful way.
I think on the other hand, just to build a little bit on what Charles said, is U.S. is the biggest investor in this technology. Most of the money that is being invested in blockchain and crypto does come from U.S. And yes, U.S. has this. There is a reason why it's difficult to, replicate Silicon Valley or Wall Street around the world, because it requires that kind of thing that Charles was talking about. It's just like, yeah, we can make this work somehow. And I think, it's thing. I guess it's a DNA, I guess. So that's the great thing that is going for us. But we also have to make sure that the way we are structuring our education, especially in the systems, in math or engineering and others, it has to translate into how we are investing in up and coming startup, companies, co-founders. A lot of students that are in these areas come from abroad, so we have to figure out how we can keep them here, how we can incentivize them to also stay here, to make sure that we can cultivate this culture of you can come, and if you're smart and bright, you have a great idea, of course we're going to fund you, and of course we're going to help you be successful. It is not an easy thing to do, and it requires regulators to work with the industry hand in hand. That's pretty much non-negotiable. Any thoughts, Benjamin?
From the lens of academia, we work with a lot of students and have a lot of exposure to student clubs. And Web3 and blockchain is probably the fastest growing interest group of any group in technology right now. And unfortunately, these young people don't have a place to really follow the rules once they get things moving. And so I largely believe it's creating financial anarchy. And there's a lot of this quote unquote degen energy that has started to creep in. We saw it with GameStop, AMC, where the power and numbers of these decentralized communities have the ability to move mountains without anyone even knowing where they're at. And so without that regulation, I feel like what we're going to see from an economic impact and development perspective is a massive shift, which is already happening. I mean, when I was, in college back in the early 2000s, late 90s, kind of dates me, is that, I had to work like 3 jobs just to get by. I'm meeting some of these young kids that they're 19 years old and they're sitting on a bag worth over $1 million. And they're able to do things that are like God power to that age group. And that age group is thirsty for mentors, and they're just not there. And then because of that, we're seeing this explosion of meme coins. All of a sudden we have Nazi coin that's worth hundreds of millions of dollars in trade volume. Like, yep. If we're not regulating that, at what point are we going to take this serious? And I feel like the longer this takes place, a lot of young people are going to get hip and they're going to say, I'm just going into blockchain and Web3 and I'm going to live the life of a movie star, and I can't blame them. So I just wanted to say that because that's an area that if you're not working with students, you don't know what's happening right now. And they are the keys they hold the keys of the kingdom right now when it comes to moving most of the liquidity around.
Benjamin, do you see those students also maybe not looking to the traditional funding paths as a result? Like they don't need to go to VCs or other or family offices because it's not the ICOs of the world, it's something else, and they might not need VCs like everyone else does.
Yeah, there's T-shirts out there of pride not having to use VCs. They viscerally are against it, largely because the American dream failed us over the last 15 years. Mm-hmm. And this young group is saying, oh, we can play by the rules and not afford a house, or we can not play by the rules and buy 10 of them. And so because of that, these behaviors are going to make a huge impact on the economy, and they already are. And it's kind of like putting the toothpaste back in the bottle. Once it's out, it's going to be real hard for us to get it back in. And so, yeah, I think there's almost, like I say, an anarchist or kind of a defiance to sense because it has been so poorly targeted towards them. I'm helping them bolster up through the American dream. And so, anyway, I strongly see it happening, and I think people should be concerned about it. I'm not saying it's necessarily a blanket bad thing, but at the same time, why would they follow the rules when right now they don't have to?
Yeah, that's fascinating.
Yep. Yeah, and at the end of the day, they do have the platforms to go and to pretty much align their ideas and views and move as a huge influential group, which power in numbers. That's pretty much the oldest story on the planet, but it works. We've seen it with a whole bunch of meme stock, and we also made the access to funding really complicated and much harder, especially for first-time entrepreneurs. It's not very easy to get attention of VCs, even though there is a bunch of them out there. We really made it hard. And when you look at the even like quote unquote semi ICOs, when you have the right ecosystem, the right connection, the right group of people, it's much, much easier to get money than go and pitch to a VC or a PE shop.
Yeah.
And you really, the judgment is very different, and it's good and bad, but that's the reality. It's exactly what Benjamin is saying. So thank you for bringing up the point.
And do you guys see that, this is I really like this point from an economic development standpoint, because my hunch is that you'll also say that there's a larger percentage of folks who would otherwise be underrepresented in VC world and have a disproportionately low amount of funding from VC world that are now able to to enter via this method.
100%. Yes.
Yep. Yeah. And Agnes, to your point, half of my clients are under the age of 30 and half of them are not from the US. So they're sitting there, to your point, Benjamin, going, I can make a lot of money trading meme coins and doing this and that. Why do I do it in the US where I have to pay 50% tax rates? Let's go to Puerto Rico. Let's go to Singapore. Let's go to the Cayman Islands. And so we need, the US was built on people coming from all over the world and doing great things. And we need to continue and incentivize that so that we don't turn away people and make it hard for them to get here and even harder for them to stay.
Okay, and with that, panelists, I want to thank you each so much for your insights, sharing your experience. This has been tremendous. Wendy Carver is back on. We're going to transition to our second panel. So I think, Wendy, you need us to drop so everyone else can pop on.
Not to worry. Not to worry. Thank you, guys. Phenomenal. Really incredible.
Thank you so much, guys.
Thank you.
Here's everybody. Thanks.
Thank you all.
Thank you. Bye-bye.
Hey, Wendy, I'm going to provide a quick summary and some disclaimers, and then we're going to move forward. So what a great panel. We heard some very interesting things. I just want to highlight a few of them. So Agnes spoke about the importance of stablecoins and that being kind of a leading edge for sort of economic enablement, which I think is right on. Benjamin talked about the authenticity of the data, which is such a great use case for blockchain. It doesn't have, it's not so much a financial marketplace as it is a data validator for things like AI and certain trends that are coming, which is really helpful information. And then Charles spoke a little bit about the brain drain that's happening when we have young people or entrepreneurs leaving the United States, and yet we have such a great spirit of entrepreneurship here. So I'm super happy to hear from all of them. And then I just want to give the usual disclaimer that nothing you hear on this broadcast or after the event in any way is financial advice or legal advice. For those things, conduct your business with your financial advisor and your lawyer. We're here to provide access to this educational information and some entertainment only. So having said that, let's get back to the panels. Wendy, you're muted.
We're waiting for Rosa and Valentina to jump in. Can somebody let them in? That would be super. We're really, really excited about the next panel. That last panel was super. And we've got incredibly even more insights. Just waiting for the remaining panelists to be let in the room. Are they here? Okay, I'm going to start with what we've got here for starters. So this panel, solutions to compliance challenges and industry developments forging ahead in the U.S. regulatory environment. So we've got, as you can see on the screen, we've got Amit Sharma. Amit has engaged in a myriad of roles that intersect financial markets, risk management, regulatory compliance, and international development. So he's the founder and CEO of Thinclusive. It's a regulatory technology company that provides an embedded full-stack global standard financial crimes compliance and identity credentialing platform. This creates a secure gateway between traditional financial services and digital asset ecosystems, including blockchain-enabled networks and decentralized financial services. or DeFi. So prior to Inclusive, ready for this one, Amit worked in both the public and private sectors, including with Mitsubishi UFJ as global lead of new products and chief of staff to the head of global markets and international business units. Command Global Services as chief of operations, and at the U.S. Treasury Department at the inception of the Office of Terrorism and Financial Intelligence, and later as chief of staff to the Deputy Secretary and advisor to Treasury's senior team under Secretary Henry Paulson. Okay, I'm just wondering where the rest of our panel is. Okay, so we're going to go to Lewis here. So I'd love to, we're so excited to have this diverse panel. Lewis, another winner here. He's the Chief Technology Officer at Fluidify and an award-winning fintech company. Fluidify empowers institutions to diversify into decentralized finance, digital assets easily, safely, and profitably with verifiable and actionable data with AI-enriched blockchain data for fund managers. So Lewis is an AI patent inventor, a cloud architect, developer, published writer, and former TV show host. So Lewis has held technical positions at, here we go, more cred, the FBI, the Department of Defense, the Department of Energy, and as well as IBM. And he has been nominated for Entrepreneur of the Year by the Entrepreneur Council of Maryland. Just checking here because I'm looking for Valentina and Rosa. Yes, beautiful. We got the superstars joining our superstars. So very, very excited to welcome Valentina Pogosian, who is a superstar in her own right. She's the global head of risk at Anchorage Digital, which is the only federally chartered crypto bank providing qualified custody, amongst other services, where she leads global holistic risks programs across all verticals, focusing on third-party management, IT risk management, enterprise risk management, testing, and monitoring. So she joined Anchorage Digital in 2022 as a testing and monitoring lead, driving the strategy behind enhancing compliance controls, frameworks, and issue management frameworks. So Valentina has over 17 years of experience in financial services and fintech industries at Meta, Fitch Ratings, and GE Capital, covering a range of financial products, including digital assets, consumer finance, consumer lending, and leasing. So she has overseen compliance teams globally across Europe, North and South America, and Asia, and she holds multiple Masters of Law degrees from multiple accredited schools. So additionally, we have very exciting and thrilled to have Rosa Nader, who is a senior legal counsel in crypto at Kraken Digital Asset Exchange, which is based on the September 2024 Forbes Advisor Review of Crypto Platforms, the best platform. She is California licensed attorney with nearly a decade of legal experience spanning across the tech industry, big law, and the big four. So throughout her career, Rosa has advised on all aspects of corporate governance, board matters, security matters, privacy matters, tax matters, commercial agreements, partnerships, recapitalizations, financing, M&A, venture capital, and nonprofit work. So currently, Rosa is dealing with and grappling with some of the most pressing legal issues facing the blockchain and crypto industry in her role at Kraken, and her long-term view for the value that crypto can drive in society, and she looks forward to seeing its potential unfold. So I'd love to bring on, to announce our wonderful moderator here. We're really, really lucky to have Paul Dowding. So Paul is prolific in his production of videos and information, telling the world all about everything that we need to know from a different compliance perspective. So he's co-founder and head of design at L4S Corp. And Paul has worked for over 35 years in financial operations management, innovation, design, and reengineering. And he has designed a patented DLT accounting solution, which is Tapestry X. So Paul deals with this is bringing the data that we are so anxious to properly source to reporting, which is a crucial piece of compliance in the space. So previously, Paul has held senior management positions at major global banks, brokers, and fund managers such as the Gartland Group, Meridian Equity Partners, BNY Mellon, Bank of America Securities, and Goldman Sachs. And he has worked and lived pretty much everywhere in the world: New York, London, Singapore, Sydney. And love to kick the panel off. Very excited to hear this incredible, diverse group. Have at it, guys. Oh, wait, Paul, you're on mute.
Thank you, Wendy, for that great introduction and for the panel. I'm in a very auspicious group here, and I think with representation from Kraken, Anchorage, Fluidify, and Finclusive, we're going to get some very broad-based and I'm sure impressive and substantive answers. So with that, I'd like to go on to the questions, and I'll direct it at one of the speakers here, and then let the others comment afterwards. So first one for Valentina. What is critical to the advancement and adoption for compliance in blockchain? And for example, how do you find and assess the compliant advancements and solutions?
Yeah, thanks, Paul. Hi, everyone. Very happy to be at the panel. Paul, thinking about advancing compliance solutions, 4 things come to my mind. Number 1 is regulatory clarity. Number 2 is talent. Number 3 is cross-team collaboration. And number 4 is industry outlook. And let's expand on this. What is regulatory clarity? Now, Anchorage Digital has worked hand in hand with regulators since our founding and had always championed the need for regulatory clarity. Within Anchorage Digital Bank is a regulated entity, and it's regulated by the OCC. We have a national bank charter, and we're a qualified custodian. Now, being federally regulated has given us the clarity we needed. Also, by being regulated, we've set higher standards for ourselves. Bank charter was key to build and advance the compliance solutions we were looking for. And as more crypto native firms move towards being regulated, this will help to even further push the advancement of compliance solutions, and as infrastructure obviously continues to mature in the ecosystem as well. Now, second point is talent. We need great talent here. Talent doesn't necessarily mean hiring folks with traditional compliance background. It helps, definitely, but actually making sure your compliance team and your risk team is very skill set diverse and tech savvy, understands specific industry risks, understands traditional industry risks, and why not adding more engineers to your compliance teams to benefit from their skill set, or training them to be compliance officers. Now, our bank has seen the benefit of that, and my personal opinion is that the future of talent for compliance and risk is a compliance or risk officer that can code and is very comfortable working with product teams. Now, third point, cross-team collaboration. Cross-team collaboration is needed to have best-in-class compliance stack. Now, at Anchorage Digital, for example, compliance has a healthy operating rhythm with our product, risk, infosec teams to ensure when we work on a product or create a product, we look at it holistically and not in siloed way. So compliance is never an afterthought. It is part of it's embedded, right? So embedded compliance is part of our products. And again, that's partly driven by the fact that we do have, to some extent on the bank side, regulatory clarity, and we do have the high standards that we strive to work towards. And then finally, the industry outlook. Now, this is very critical part because a lot is happening in the industry. We can learn so much from our peers in the industry, from our colleagues. We can track and look at the emerging risks, what is happening to travel rule, KYC onboarding processes, transaction monitoring, analytics reporting. There's just so much available, and our peers are very happy to share their knowledge always. So to conclude, I'd say that the regulatory clarity, diverse skill set, cross-team collaboration, and industry outlook are key to advancement of compliance solutions.
Thank you, Valentina. That's a phenomenal answer. Does anyone else want to add to what they think is critical for the advancement or adoption of compliance? Or we'll move on. Okay. In looking at that side of things from, as Valentina said, from regulatory, talent, collaboration, and outlook, obviously digital assets have their own distinct properties and unique capabilities. So what are the attributes and characteristics, Amit, that you think are advantageous to these digital assets and compliance?
No, thanks for the question, and appreciate the opportunity. And partly why I hesitated in following up with Valentina. She just did a great job in terms of sort of the manner in which you can create diverse compliance systems. I think to answer your broader question and to complement hers, one quick step back, right? One, I think we need to first understand that financial crimes compliance risks, whether they be money laundering and drug trafficking and terrorist financing and sanctions evading and counterfeiting and fraud and tax evasion, these are sort of illicit activities that pervade all types of financial services, both in the traditional side and in the non-traditional side, including now in web native platforms, in decentralized financial services, in tokenized financial value and issuance activities. So we have to think about financial crimes compliance mitigants in the context of the fact that we've seen a lot of these behaviors before, and now we have to look at it in the context of new technology applications. In that sense, I would argue that comprehensive application of money laundering, anti-money laundering, financial crimes compliance obligations are in place. The Bank Secrecy Act and other follow-ons, the Anti-Money Laundering Act and the like, already obligate any purveyor of financial services products in this country, certainly in the world, under that guise, period. And you can be a digital asset service provider, you can be a traditional bank, deposit institution, money service business. If you are undertaking activities or practices that are covered, you are covered, period. And so for those that may claim in the digital asset services sector that they're not covered, if you're undertaking the provision of financial services and products, even in tokenized, peer-to-peer, decentralized ways, you are covered. You have the obligations to know your customer. Now, this is what gets exciting in the digital asset services space, because the underlying technology affords step function upgrades in both the operational and financial market infrastructure and in the mitigants to identify and interdict bad activity in the financial services domain. And that's where we can look at what are those activities and practices meant by those digital asset services, and then look at the underlying attributes that distributed or that digital assets are built on, right? And they're built on some fundamentals, right? The ability that you get distribution. Blockchains create a shared system of record across a number of different business networks and members. This does not exist in more centralized systems. So to be able to have shared ledgers, disparate ledgers reconcile, and transactions via different networks can therefore be traced. And talk to law enforcement. Law enforcement believes that the underlying technology is a boon, not a bust, a boon to it. The immutability of ledgers, and this splits a number of different ways, but generally speaking, the consensus being required from all members and validated transactions are therefore on permanent record. Again, a boon to law enforcement and regulation, a boon to transaction traceability and analytics, a boon to client monitoring in ways that also enhance underlying consumer protections and privacy protections. Permission versus non-permission networks. And we can talk and debate about where they have a place, and both have a place in certain ways. And we can talk about the risk and challenges of both permission and non-permission. But when you have, especially in permission networks, the ability to enable access privileges and share verification and validation of a transaction between counterparties, or that I can verify and validate that the other side of the transaction, the counterparty, the receiver, is in fact who they say they are, is in fact tied to the wallet to which the asset might be pushed. So a number of these elements, transaction traceability, auditability, immutability, distribution, actually decrease risk. And what we need to reemphasize to both the sector and regulators and policymakers that are now looking at wrapping around updated and modernized guidance, regulatory and otherwise, is that not all technologies enhance risk. A lot of technologies, in fact, mitigate risk. And I would argue that the step function upgrade that peer-to-peer, tokenized value, digital asset services in a Web3 domain are inherently creating an infrastructure that mitigates risk and adds value to consumer protection and privacy in ways that traditional financial services never have, in ways that concentration risk with anointed intermediaries never have. And if we can combine those applications in ways that embed compliance tools, you have a fundamentally more secure, fundamentally more equitably accessible, and fundamentally more efficient financial market infrastructure, because it embeds the quality control. So those attributes, I believe, need to be reinforced to underlie embedded compliance in a new wave of financial market infrastructure that's connecting the world in a way traditional markets just have not.
Amit, I have a follow-up question to one of the points you're making about these attributes. I'm just curious what your take is. The immutability feature, I think, is huge. And I think if more people understood that, to your point, that it actually decreases risk. But I think someplace where myself and others sometimes don't connect the dots is even if a transaction is immutable, if you can't identify with accuracy the end users, then I think there's still the potential to obscure identities. And so could you just connect the dots in terms of how those features work together? I know that your company works on bringing this infrastructure to life. I'd really like to understand that piece of it.
Yeah, and so the way, it's a great question. The way I'd answer it is kind of quickly twofold, keeping it, appropriate level, because man, I could jump down to this rabbit hole with the geeks involved. But it's twofold. One, to the extent that transactions are in fact traceable and then immutable on a ledger, that's a boon from a traceability, interdiction, analytics perspective. Now, that said, are there privacy diminishing or anonymizing tools out there? Absolutely. Are there things that work to deliberately obfuscate either the transaction messaging and or the counterparty attributes associated with the wallets, etc.? Yes, there are. And I would draw that distinction back to and including cash, right? The most anonymous transactions on the planet remain cash denominated. If you want to launder money, and this is a word of advice to every illicit actor out there, don't do it with digital assets, do it with cash. And it continues to be the most heavily laundered instrument on the planet, US dollar cash. And we're not outlawing it anytime soon. So if we think about where we need privacy protections and enhancements, the second aspect of the question where immutability comes in is we can now create with the same technology the ability to transaction tag with client associated credentials. I can say that this wallet belongs to Rosa that's sending this asset to Amit with this wallet. I can even wrap the asset around that credential so that I know exactly what wallet and for whom and what purpose that's transacted. You have none of that in traditional fiat-based payment rails, and you certainly don't have that in peer-to-peer cash transactions. So this is where the attributes are enhancing. And are there privacy-related and anonymizing tools out there? Absolutely. But I think that the underlying attributes, if embedded in this way, then we can actually enhance controls. I hope that answers a little bit of that.
Yeah, that's super helpful. Thanks.
That was great, Amit. I was going to say, because one of the things we've seen in the industry is that the protocols allow a consistent format within the participants, and therefore providing compliance reporting can be one and done because everyone's using the same protocol, whereas you tend to be dealing with different infrastructures with different applications, and everyone's creating the same report from different data. And so therefore you've got a relief on that. Does anyone else have any points on these attributes that they think, because I think the digital world offers a lot of opportunity and potential in that space. But looking at that, looking at what we've got in terms of talent and what Valentina made, and then these distinct attributes. Lewis, if I can turn to you, what can we see as things that we can be advantageous to us from the foreign regulatory environment that we can adopt to sort of encourage compliance here in the US?
Well, there's absolutely so much to draw from. So let me give a little background for people that haven't been in this space that may be watching. So our platform tracks digital assets that are on decentralized blockchains, and we've been doing this for about 3.5 years. We currently track over 60,000 different assets. We identify about 6 new ones per day on average. And so you have everything from what are called stable tokens to tokens that are backed by real world assets, fractionalized real estate, fractionalized carbon credits, precious metal backed tokens, utility tokens, and of course cryptocurrencies, which most people say cryptocurrencies, but they are a subset of this larger group of tokens, so to speak. And so you're in an incredibly fast-moving industry, even though the majority of people out there don't realize that. And so where are these companies that are issuing tokens? Where are they setting up? What are they doing? So we've been traveling around the world for 3.5 years now. We've been to Switzerland and Singapore and Hong Kong and the UAE, I mean, many places in the world. And so if you look at where these companies are set up and where these assets are being established, the first thing that companies are looking for is, where is there a clear virtual or digital asset regulatory framework? You have them in Switzerland, you have them in Singapore, now in Hong Kong, Bermuda. I think, in my personal opinion, I've spent a lot of time at VARA, not DARA, but VARA, which is the Virtual Asset Regulatory Authority in Dubai. They are an absolute incredible example of a regulatory body that has very, very clear guidelines. They have a beautiful office. You can schedule time. You can go in there. You can work with them. They're very collaborative, and they're very, very helpful to anyone that's looking to create any type of a digital asset or a new financial product that may use a digital asset, or, you know, as a utility token or something along those lines. So number one, have a clear asset regulatory framework. Number two, promote a supportive and progressive ecosystem for companies to build products on. Again, you see incubators in the UK, Switzerland, Abu Dhabi, for example. ADGM has Hub 71. There are all these incubators that are in place to help companies to build their products and to, you know, what I was hearing earlier in terms of attracting investment. The first panel was talking about that. You know, attracting investors. I mean, these incubators put these companies in front of investors that understand blockchain, digital tokens, understand the financial market, and they put them in front of these investors that their portfolio is designed to include tokens or other blockchain type of products, so it matches their risk tolerance, and they have capital to deploy now. That's another thing. As a Canadian corporation, there's a lot of, you know, VCs here that are struggling to be able to do due diligence on a company that works in blockchain. They just don't have the people in place to understand all the subtle nuances and differences. So again, you need to have a supportive and progressive ecosystem for companies to build. And then the third one I want to mention lastly is have a sandbox, so that these companies can actually build their products, work side by side with the regulators on the new products. And this helps the companies to reduce the risk when they're building these new financial products, right? Because it's being done in a collaborative way with the regulators. And so if they happen to look at a solution or start to look at technology that a regulator would say, you know, that doesn't really fit because it has a self-destructing transactions, or it obfuscates certain financial type of data, as Amit was talking about, the regulators can say, you know, you might want to look at other technologies where that isn't the case, because we won't be able to approve your solution if you use something of that nature. So that's my suggestions as a solution builder.
That covers a lot of ground. So what, between the different jurisdictions, what do you see any other distinctions between, say, Asia and Middle East and Europe that the US can you know, take on board to look at these items?
So in my opinion, from the different places that I've been, I am a big fan of the UAE frameworks. As I mentioned, VARA, ADGM as well, Abu Dhabi Global Markets. I mean, they're blazing a trail out there with very progressive regulators that are working collaboratively. I mean, I've been to their offices, I've talked to them, I've sat with them. You know, it's a very, very open discussion. They want to be supportive, but at the same time, they're very conscientious of all of the things that we've talked about, such as, you know, counterparty identification and money laundering. You know, they're very conscious of this, and they want to be able to have innovation, but at the same time, they want to be respectful of international law and making sure that people are following international laws, not just the laws within their jurisdictions.
Yeah. And you'd mentioned capital, and a lot of these areas have sovereign wealth funds, whereas the U.S. has a more established private investment. Is that something that needs to be included?
Yeah. So, again, this is speaking from my experience. So I lived in Mountain View, California for 10 years. I was an angel investor with one of the angel funds that are out there. I live 2 miles from Y Combinator. So I'm very familiar with the Silicon Valley scene. I've seen a lot of investors just pick up and move. Crypto Oasis is absolutely a they tout it. They were in Silicon Valley. They moved to Dubai because, again, the regulatory framework was much clearer. They are able to invest in companies much more easily than they could in the US, just simply because there was just too much uncertainty and risk for them to make investments in startups because they didn't know where the regulations were going. And so, again, that's something where, there is a lot of capital out there. And having a more robust and clear set of framework would definitely help. And it not only help the startup companies, but it would help the investors to have clarity in what companies it's safe to invest in and, which ones will fit, not just now, but, 5 years from now.
Yeah, it's definitely a global marketplace and a global reach. I mean, Bitcoin is, a global network. A lot of the DeFi and what's possible with blockchain and distributed ledgers is definitely in that that capability. So on that basis, and I'll turn to Rosa here. There's obviously regulatory. We've just heard some ideas around frameworks, the distinctions of the assets, how to advance compliance. But within the regulatory bodies in the US, the SEC, the CFTC, the OCC, the Federal Reserve, what do you recommend to them as regulatory bodies and also companies dealing with them in terms of how do we advance compliance?
Yeah, thanks for the question, Paul, and it's great to be here with you all. I'm an attorney, so I have to preface everything I say that this is not legal advice and these opinions are my own, not of my employer. I think, Lewis kind of set the stage for a lot of what I think context matters here. It's true that the US is behind in terms of regulatory frameworks, and there are a lot of good ones to draw upon. Lewis mentioned UAE and several countries in the EU. I think what's important when we take that information and we process it is that despite wanting clear regulatory frameworks, as an attorney, I can say that is definitely one of the biggest pain points right now for us. It's important to understand that the US still has enormous influence over the industry, much more than I think we understand when we look at, for example, when the Fed cut rates by 0.5 a point last week. Bitcoin obviously responded positively to that. We're seeing China recently with releasing their stimulus package. There's much less of an impact there. And we all do know that there's a ton of crypto adoption in Asia. The US is actually behind India, Nigeria, and Indonesia in terms of crypto adoption, generally speaking, based on Chainalysis's 2024 report. So despite the numbers of users in other countries and the regulations being developed in other countries, the US still has an enormous influence, impact, and opportunity, I would argue, to really develop the landscape further. And it can be pretty grim when you look at the various enforcement actions. And, as lawyers, we are often frustrated by what we perceive to be regulation by enforcement. And it's just, sometimes it feels like a constant influx of negative actions against the crypto industry. But there are examples that I'll get to in terms of, I think, if you look at the macro, the US does show some signs of, a brighter future in terms of the way these regulatory agencies can work together. So I think, key is really understanding the US's influence despite the lag that I would say we've had in terms of regulatory framework adoption. The next is really understanding how politics and partisanship of the issue has, I think, impeded the adoption of these frameworks, and just really working on education to expand the tools and the knowledge so that folks across, both sides of the aisle can understand that this doesn't need to be a partisan issue, that it doesn't benefit a party to either be, a champion or a deterrent to the technology. I think thanks to folks like, for example, Marco Santori, who's our chief legal officer at Kraken, doing a lot of work in Washington to advocate and increase education amongst politicians and amongst lawmakers to really understand how the US can harness this technology and use it to our advantage by becoming a more friendly environment for these projects to thrive and to deter companies from moving offshore for lack of adequate guardrails and in fear, quite frankly, of, it's very costly to constantly be battling lawsuits. So I think, again, understanding the US's influence globally, reducing partisanship, and then collaborating amongst these agencies. So you mentioned the Federal Reserve, the SEC, the OCC, the CFTC. Well, oftentimes these agencies have to unanimously approve something for a product to come to market. An example, actually a positive example, is the SEC last week approved BlackRock's listing of physically settled options tied to their Bitcoin ETF. This is great. The Bitcoin ETF was only approved in January of this year, and that was one of the biggest financial developments of the year, I would say, certainly in the crypto space. And the SEC approving this is great. As we know, increasing options features in the industry increases liquidity, and increasing liquidity is great for the market. The more institutional the more institutional adopters come into the market, the less volatility, because the more their actions impact volatility. And so we want to reduce volatility and really show the public more about the benefits that can be utilized from this technology in the grand scheme of things. So, however, even though the SEC approved this feature by this product, the OCC and the CFTC also need to approve. And so I think greater collaboration amongst these agencies is kind of the final piece. And coming to, it's an election year. That always means a lot of opportunity. And I think it really behooves of both potential administrations to understand how encouraging bipartisanship on this. The internet is not a partisan issue. It's a well understood technology, and of course there are still a lot of issues with the internet. We have privacy issues, protecting children online, a lot of different issues with the internet, dark web, and so forth. But by making it a nonpartisan technology that the general public can use and that we can use to supercharge our economy, create jobs, and advance technology, I think those are the real key opportunities that the U.S. has right now to advance the ecosystem.
Yeah.
That's great.
Paul, if I may chime in.
You may, sure.
Yeah, I would echo what Rosa just said, that, I do believe that in applying federal level regulation, this will address a lot of risks in the industry, a lot of the fears that may be around with regulatory oversight, come such protection, such as the BSA compliance, consumer protection, and all of that, all of those elements are critical to reduce risks and inspire and give more confidence into digital assets industry and provide more stability.
Yep. I was going to say, I know you brought up the Bitcoin ETF, which was interesting because it was sort of like it's actually a form of tokenization if you think about it. They wrap Bitcoin and then issued a share on the New York Stock Exchange. And most shares are traded digitally. I mean, you could argue it's electronic versus digital. Was it on a distributed ledger versus a central one? But that mechanism exists. You can see these distributed ledgers as really still being representative of book entry transactions, which is how transactions are basically settled today. So I think there's an opportunity to come within the current infrastructure regulations, because the process is the same. I'm just curious for anybody here, and maybe Rosa, but anybody else, in terms of when you're looking at what we've got within these regulatory environments, how are you seeing the bias skewing from sort of, how can the US adopt, leverage its infrastructure and current regulatory capabilities and stop the sort of, offshoring of these entities?
Yeah, I can start that off. I think as long as we have Chairman Gensler heading up the SEC, there are a lot of headwinds in the industry, and there are a lot of political factors that tie into that. So I think that without a friendlier tone from the governmental actors in the current ecosystem, there is going to be that risk of offshoring, and there is going to be the risk of a lot of projects moving overseas. But I think at the same time, the United States still is number 4 globally in terms of adoption. And there's a lot of other redeeming factors, talent, infrastructure, and so forth that make the United States still an incredibly attractive place to start and grow a business. So I would say it's not too late by any means. And there are a lot of companies that are fighting the good fight. I would mention Kraken as one of them. And I think greater cohesion in the industry, I think there's a lot of opportunity for companies to come together. And that's happening right now. I mean, we see more recently Congress is having, congressional hearings specific to the industry, which is heartening. And I think that there are, again, in addition to Kraken, other companies that are trying to collaborate with other companies to advance kind of the messaging and the education and really get the point across in terms of how incredibly valuable this technology can be. So I think that the more cohesion that there is in the industry, the greater we can collectively advance the public knowledge and then, use that as advocacy to, whether it's through lobbying or through other relationship building to really advance the US's posture on the matter.
So I think from what you've all said and contributed, and it's been fantastic listening to all your answers, we've got a panel that's focused on how do we encourage US compliance, but we've got a global perspective for lessons learned. So just as a final question to you all, what are the, attributes, what is the new technologies that maybe are there or coming, and anything else that you feel that we haven't mentioned in terms of these digital assets and blockchain and the crypto asset world that we feel are advantageous to adopting compliance?
I can start also just kind of riffing off of what Rosa said, because I wanted to emphasize, but also I'm an equal opportunity antagonizer, so I'll put this out there. We often treat regulation as a monolith, and it just isn't. We have a federated regulatory and supervisory authority in the United States that's unique. That's not the case in so many other places around the world that sort of roll up a single financial services regulator, and then depending on the activities and practices, et cetera. Gary Gensler does not supervise banks, right? He's chairman of CFTC, right? Like the SEC has a role, the CFTC has a role, the OCC has a role and mandate, the Fed, Reserve Bank has a role and mandate, the United States Treasury has a role and mandate, the FinCEN has a role and mandate, state-based regulators. Now that looks like a hodgepodge, and it is. But we have to look at regulation as also being, having personalities and their different mandates, and our ability to educate and advocate must go through the appropriate channels in that regard. And one's consumer protection goals may differ from financial system integrity goals, from prudential regulatory goals, and the like. And we have to sort of look at that not as monoliths, but actually in that diverse way. The second thing I'll say antagonistically is, and similar to financial engineering of the past, and that continues in traditional financial services, is that one of the biggest enemies of the crypto market is the crypto market, right? Our organizations that pursue snake oil type, products and services that then is not a failure of the underlying tech, but because corruption and greed, you have the Terra Lunas and the FTXs and the like, and it paints a broad brush in an otherwise also non-monolithic industry. Crypto is not monolithic, right? Payment stablecoins have a different function than do deposit tokens, than do securitized obligations, than do NFTs. And they all have to be looked at within the context of the activities practices that they are intending, and then the risk associated and the challenges we need to sort of mitigate. So when I think about attributes to your final question, I think about the step function up and the underlying attributes we talked about at the beginning of the conversation actually help address and mitigate risks in ways that traditional financial services and traditional anti-money laundering, financial crimes compliance tools just have not solved that challenge. And we need to now embrace those in this context and do so in a way that educates the appropriate channels for regulatory oversight, so that the clarity that is afforded an asset tokenization platform or securities platform is apropos to that platform and not, say, payment stablecoins, because they're radically different in the same way that modern derivatives have radically different applications to mitigate and or exacerbate risk. So that's how I would close here.
Good. No, my view is that, yeah, there's ways to look at them as not being so different, but I think people have looked at crypto and DeFi and thought it's really, really different, and there's a lot of similarities. Does anyone else have any comments on attributes and the new technologies? Go on, Louis.
Yeah, I'll keep it very brief because I know we're close on time. But I would encourage everyone to take a look at what's coming out of the EU, the DARA, the MiCA regulations. I know we're focused on the US, but the EU has a number of different regulations that are going into effect January 13th of 2025. And they don't just apply to EU-based financial institutions, but they apply to anyone doing business with EU-based financial institutions. And when you really drill down into them, they're kind of common sense things. Like if you have a financial report, you need to be able to show how you calculated your asset value, I mean, things like that just you'd think you'd be able to do. But unfortunately, in the digital asset space, a lot of companies can't do that. And that's crazy. And so the EU has said you need to be able to do that. But take a look at the things that are coming from other parts of the world that will absolutely impact US financial institutions, even though it's not US regulations.
Okay. Is there anyone, does Valentina or Rosa want to add anything last, or?
Just maybe very quickly, I would, you asked about the tools or the reporting. I would say that our industry has a lot of tools that are free. If a company cannot necessarily afford a tool that they need to pay for, there are so many amazing tools that provide analytics, that provide tracking, that provide necessary information, and they scan and they do a lot of other stuff. And they also issue reports that you can get access to and educate yourself on the industry trends, emerging risks. And so I know we're wrapping up, but very quickly, look around the industry and just use what's available to you and your peers, ask your peers.
Okay. All right. Well, I'll thank you for all your contributions here. It's been fascinating listening to it, and I think we've got some great ideas. I'm sure the audiences appreciate them. Thank you to Jackie and Wendy and Matt for providing us this forum. It's been fantastic listening to it, and we'll hope we'll guide everybody, the companies, the regulators, and everything to a better compliance environment, which is going to be better for everybody. And I think the potential is there. We've just got to realize it. So thank you.
Yeah, Paul, I'll add that, because Amit made the point about it's not a monolith, and there's such a wide spectrum in terms of what's going on in the industry. And for every, scammer or a bad project that gets pressed, there's also people using crypto to send remittances across borders that they wouldn't be able to do through using traditional finance. And so I think really harnessing and not forgetting the potential of this technology across demographics, across borders, and really increasing access and inclusion to the financial system, I think is something also that we shouldn't lose sight of.
No, that's great. Well, thank you. That's a good way to wrap it up.
I definitely want to thank all of this panel as well as the panel that came before us, because I know both as an attorney as well as an educator, everything that you're saying is so critical for the education of our community, both those professionals as well as the consumers. So I definitely want to thank everyone who's here. And I know that we're going to be doing more virtual events for DARA and for Blockchain Legal Institute. So definitely for those that are following us, definitely hop on and stay tuned for other individuals within our community. Wendy and Matt, do you have any last minute thoughts? Because this has been a phenomenal discussion, very rich with a lot of different things.
I think we were super lucky to have this incredible diversity of expertise, thought, and incredible insights, right? It's things that we're not seeing in terms of opportunities elsewhere and all of the advantages that we've got moving forward coming from all of you. And thank you. I think it's absolutely incredible and really proud to have been able to support this panel and to have this video out for the universe to see all the great work being done by all of you and all of the super insights. Just incredible. Thank you to Paul, Rosa, Valentina, Lewis, and Amit. You guys are exceptional.
Just wanted to echo all the thanks all around and mention that, DARA is an industry-led initiative, and, it's open to membership and contributions, people who are compliance officers or entrepreneurs that want to kind of take a leadership position in what we consider to be vital to the U.S. economics and to entrepreneurship and the great spirit of leadership and innovation that the United States has always brought to industry. Look at the DARA website, reach out to a friend that might have invited you to this broadcast, because this is an industry-led initiative, and so everyone is welcome. Those are my last comments. Anyone have anything wonderful and super inspirational to say? Maybe Paul? Put you on the spot.
I'm going to say, quote Yogi Berra, the future is not what it used to be. We've got a great one ahead of us, so let's go grab it. Yeah.
That's great.
Super, Paul. That's great. And thank you also one more time to our previous panel who had the same amount of incredible insights and great expertise, to Emily and to Charles, to Benjamin, and to Agnes. So to all of the panelists, incredible. Thank you. Really great insight.
That's great.
See you all soon.
All right.
Thank you.